Good morning, everybody, and welcome to the local pension board. And it is Wednesday, the 8th of February. May I welcome you all for being here. And as always, it is being broadcast live on YouTube, and viewing will be available. Now, as this meeting is taking place virtually, with officers presenting the reports, may I please ask you to keep your microphones on mute unless you're speaking, and then I will see your hands up. And I think it's probably also best to keep your cameras off unless you're speaking. I am Rosita Page, the chair of this meeting, and the first item on the agenda are the minutes, and I'll just have to look, held on the 26th of October. Can I take them as read and confirmed as signed, or are there any comments, anybody? I'll take them as read. I see no hands up, and it is confirmed. I assume everybody is in agreement. Richard, Caroline? Yes?
Yep.
Yes.
May I just say we have got Mr. Shepherd, Caroline Fairchild, and I and Mr. Manjit Soroya here, but I do not see Ruth. Oh, I've forgotten Ruth's surname. Ruth Gilbert and Councillor Riot in attendance. They may join us later.
Ruth
if
is
not...
with us, Chair.
Oh.
Yes, Ruth is online.
Yes, I am online.
Oh, hello,
Yeah.
Ruth. I can't
Hello.
see you.
I'm just going to admit Mr. Cross is the reserve, but he's observing today.
Yeah.
He's just observing the meeting. He's just joined us.
Oh, good morning, Tony, Anthony, and good morning, Ruth. So hang on, everything has just gone, well, everything just went black on my screen and it's going again. Can you still hear me?
I can hear you, Chair.
Oh, because my screen keeps going black. I hope everything will be okay. Yes, so we only got Mr. Riot not attending. Right, so we then go to the first item on the agenda. Oh, sorry, we've done that, which are the minutes. Item number 2 is question time, and I have received no questions. And I will go to item 3, which are any items of any urgency, which I also have received none. Declaration of interest, item number 4, and I see Councillor Shepherd has got his hands up. Councillor Shepherd.
Thank you. This is just for the avoidance of doubt. There's reference in item 10 to the teachers' pension scheme. I get a pension from them, but I've been advised by Ian that I'm no interest to declare, but I'll just say I've got no interest to declare for the avoidance of doubts for anybody. Thank you very much.
Okay, that is noted. Thank you very much. There are no other hands up. No, there is a hand up on number 15, and I can't see who it is. There is no picture or anything. Do we? No. Okay, so we go over to item 5, the first substantial item. But please note, hang on, are you still there? Hello?
Yes.
My screen keeps going black constantly. It keeps flickering black. So if I am gone by any chance at any time and something is going on with the IT, somebody else has to take over very quickly. I don't know what it is. It just has started to flicker. The battery is full, so it must be some internet. And I've also got it plugged in now, so I don't know what it is. Okay, and item 5, it is the Pension Fund Administration Report, October to December, on pages 9 to page 20 in the pack. and it is over to Ian, who will be introducing this. Thank you, Ian.
Thank you, Chair. Good morning, everybody. Welcome to the meeting. I hope you can hear me okay. This is the standard report that I produce each quarter in terms of the administration, just covering all the key points. This covers the period October to December 2022. I'll start. I won't go through it line by line. I'll pick out the key parts. The first bit I would like to highlight are the performance indicators as mentioned in points 4 and 5. And if I could just ask you to go to the end of the report on page 20 of your pack, Appendix A, that is the KPIs for the quarter. And I just think it would be good just to quickly go through those. We have seen some improvements on the business process perspectives, particularly around the deaths. At the last quarter, the deaths were down in the 70%, and in this quarter they went up to 96%. That's because we managed to complete a lot of the project work that those people were previously on. So that resource, we managed to move that resource back. And it also trained 2 more people in that area as well. So that's definitely helped us. So the KPIs on the business processes are close or above target. On the customer perspective side, not a great deal of change from the previous quarter, but I think overall it shows a strong quarter for the section. So that's the first point I just particularly wanted to point out. If I move on into the actual workloads, that's on page 10 onwards. These are the workloads that we show each month. But what I've done this month is I've broken it down to give you a more detailed sort of target rating in terms of above, below, or effectively the arrows, the ratings. So below target, an arrow down, close to target, an arrow across, or good or better than target, an arrow up. Because whilst I obviously reflect the numbers every month, I just thought it would start to show themes more easily for yourselves to actually identify more easily the areas where we're behind. The volumes are coming in faster than we can clear them, and there are 2 areas that stand out, both through the 3 periods, October, November, and December, and they're preserved benefits and aggregations. The other areas are above target, and I'm comfortable with those. But the 2 areas where we are really up against it is preserved benefits and aggregations. What we have been doing, the new team manager on the early leavers team, Phil Drury, who has joined us, he's been with us now 6 months. His team deal with these 2 areas, and he's been doing a concerted effort and a review of the aggregations. Aggregations, just for the newer members, are where members leave and then rejoin. So it's the opportunity for the scheme members to combine their benefits back together or keep them separate. There's about 9 or 10 different scenarios of aggregation, so it's not as simple as every case is exactly the same, due to the complexity of the way the scheme has been built over the years, some with final salary service, some just career average service, whether the transfer is within the same scheme, different schemes, whether there's a 5 year or less break. So there's different scenarios. But Phil has made a start on the aggregation review, and I am really pleased to say that the January figures, which will come in the next quarter, we managed to complete 439 aggregations in full, and on top of that another 250 plus where we've actually done them but not yet checked them. So we are actually making some really strong inroads into aggregations now. So that work remains outstanding. That's our kind of key priority area. Preserve benefits equally. and more people are being trained on preserve benefits as well to help that process through. And we've also got help from the payment and taxation team to also help us with preserve benefits to try and keep the numbers a bit more manageable. But they are the two key standout areas that will be will have concerted effort on over the coming months to continue to try and reduce those. In terms of the other areas, I wasn't going to particularly dwell on a number of these points. McCloud, Stuart is doing a report on McCloud, which is a much detailed report that will kind of explain where we're at and do a little bit of the history as to what McCloud was about. That follows the request from board members at the last meeting to give a more detailed update on McCloud. So that will be later in the pack. Dashboards, there hasn't been a great deal of progress on dashboards in the quarter. There's been no technical work done in dashboards. What we're concentrating on is continued data improvement in readiness. So this is obviously a big area of work as well, but there's not been anything really to report on that other than just work in progress in terms of getting the data to the strongest position we can ready in preparation. In terms of audit, there was quite a lot of activity in audit in the quarter. We actually had 3 audits, all internal audits, on pension contribution bandings, pension contribution calculations and transfers in and out. Pleased to say in all 3 audits, we got a clean and positive outcome. There was one very minor point on the contribution bandings where one case was identified as incorrect in terms of the banding they were on, that the data came through from the payroll system. That was looked into and it was resolved, but everything else was okay. We did a further check and they were all fine as well. In terms of the contribution calculations and transfers in and out, they were all fine. So that was a positive quarter in terms of audit reports. There were no new regulations, but one thing that we did pick up on in the quarter is there's going to be a consultation at some point in 2023. And it's expected there's going to be a retrospective review of widowers' benefits, backdated as well. So we'll watch this space, but that potentially means there'll be quite a significant area of work coming our way, in addition to McCloud, in addition to dashboards. So this is another area to watch carefully, but it is in the very, very, very early stages. We haven't even seen any consultation draft at this stage, so I'll provide more information on that as that becomes available. So I will be watching that area closely throughout the next few months. In terms of the valuation, there's a report that follows on the valuation and the funding strategy statement, so I'll cover that separately. We have heard the new code of practice from the pension regulator is now expected in early to mid 2023, so literally any time now. We believe it's being sent to Parliament very shortly, and after that review it should then be hopefully published, so we'll be able to start looking at that and reviewing any changes that we need to make in terms of the code moving forward. We don't anticipate there'll be a lot, but it's something we need to work through, and that also is actually included in the admin business plan later on in the agenda. Employer risk. The one thing I really want to say on this is following the move of employer risk work from internal legal colleagues through back into pensions, that's really helped us move these forward a little bit quicker. So we now have a dedicated person within pensions who's working on employer risk for us for admission bonds and things of that nature. It was a really busy quarter. There were, I think, 6 or 7 new cases that came through in the quarter. They all started in August, but by the time that we'd had the information come through, they fell into this quarter here. So there's a lot of activity in this area, but they're all progressing positively. And my colleague is on top of all of these. and we have engagement from all the parties, which is really positive. So I don't anticipate any major problems on any of these at the moment at all. So whilst they're all on there and there's a number of high ones in there, they're all in progress and they're moving positively. We've had a couple of increases on bonds. We've requested an increase on the bond for the Mighty and SLM from Northwest, both up to 300,000 because of the increase in number of scheme members who are now getting closer to the age 55 plus category. So capital costs would increase if anything was to happen on either of those two contracts. They're in hand, but they're medium to low risk, but just making you aware that those are progressing as well. The other good news on this quarter is the most outstanding one, which I know I've talked about a number of times, which is the Life Academy to Total Swim. That was completed. That was the only one that was still outstanding pre-valuation. That's been completed and has now been finalised. So that was the biggest risk one that is now complete and final. So that's good. In terms of knowledge and understanding, there's a report later on training generally. So I'll refer that one to colleagues later on in the agenda. That's all I had to say on the actual report, but obviously I'm happy to take any questions from any members. Thank you.
Thank you very, very much, Ian. As usual, very comprehensive, and just about everything is covered in the report. Before I hand over to members, will we be getting a report on the new code of practice if and when it appears? And as you were mentioning, the consultation, again, will we be informed, and will that be the next meeting in April, or do we see that later on in the year?
The answer to the first part, yes, you'll definitely get a report on both of those. In terms of when, I'm afraid I can't be really very clear on that until we actually receive the information through to ourselves. I'd like to think the TPR report would be in the next quarter, but I've been saying that probably for a few quarters now, so I'd probably be remiss of me to be too clear on that. But when it comes through, we will do that. The consultation on the widowers, I really don't have any indication on when that will be, but as soon as it comes through, I will do a report on that as well.
The reason why I was asking, I know I was a bit late in looking at things, but our agendas and the paperwork is always quite a lot, and it's always very full. So maybe we need to have a little talk about that at a later date, whether we might want to, and I'm just talking because I didn't have a chance to have a briefing, so I'm talking a little bit off record, but maybe we should look at adding maybe an additional Teams meeting in the next year's calendar or something like that, because our agendas are really, really full, and, you know, maybe members can have a think about it. And the other point I'm very pleased about, that all the bonds are now all sort of addressed, so we don't have to give you any authorization to write any further stern letters or anything like that, because that was one of the concerns I had when I was reading the agenda. Thank you. Over to members. Is there anything anybody would like to raise? Ruth, Caroline, Richard? No, there is a total silence. So, as always, thank you very much indeed. And it's all noted and all positive stuff. And so we move over to agenda item 8. And that is to inform us of the results of the consultation of the FFS strategy. And again, that is over to you, Ian. So
thank you.
Thank you.
Thank you. Yeah, this is kind of coming to the conclusion of sort of 18 months work, this is the valuation. For those newer members, every 3 years the fund is valued, and we just assess the assets and liabilities across the fund, and then from that we determine basically the employer contribution rates that are payable for the employers for the following 3 years. As part of that exercise, we review the funding strategy statement and the investment strategy statement and the assumptions that are used in the valuation. So this is almost the final report in terms of that process that we've been working through. So in terms of this report, the FSS, that's the funding strategy statement, and the ISS, that's the investment strategy statement, went out for consultation with the employers. Those consultations ended in early January this year, and as part of that, we sort of pointed the employers to the areas that particularly were changing. There wasn't a great deal of change in there, but it was just really highlighting any particular changes to them. We didn't get a great deal of response back. We did get some inquiries from the employers, as we often do, but that was more generally for a kind of a wider understanding of the document rather than actual specific changes to it. That was for the funding strategy statement, and equally for the ISS, the investment strategy statement. So we proposed that the two documents as they were prepared earlier in last year will remain as they are, and they'll be taken through to committee on the 3rd of March for confirmation and final sign off and approval. As part of the exercise as well, Kat and Bulash have been very, very busy working on the net zero climate strategy, but I won't dwell on that as there's a further report that follows this report on that particular part. The other part of the valuation, though, is the assumptions, and you may recall we discussed this sort of towards the back end of last year about the assumptions and the increasing concern really about inflation. Inflation we'd set originally at 2.7% for the assumption. That was then raised to 2.9 and taken to committee on the 18th of November for approval, and that was approved. So the final assumptions that we've used in the valuation calculations are those in the table, item number 18 on page 24, and you'll see that the inflation has been set at the 2.9 per annum for this valuation calculation. What this actually means in real terms is a good news story, and I think this is the important part I really want to sort of hear, that the overall fund value in terms of the valuation, if we look back at the 2019 position, the fund was 89% funded, and we've now improved significantly, and the March 22 valuation for the fund is 105% funded, which actually means for the first time in very, very, very long time we're actually in a surplus position, which means we've actually got we're overfunded effectively. But that doesn't mean we should stop that, because we still have to take account of future drops in the market, uncertainty. So we're still aiming to go higher than that, and we're aiming for employers to reach funding levels of around about 110%. And then after that, we can start to give money, well, not money, but give a reduced rate to those employers moving forward. So we've definitely improved in it, and I think this is a really positive point to make in this report here. In terms of the timeline, that's detailed on point 28, page 25 onwards. So you can see all the stages we've worked through. We're now at the point where we are finalising the assumptions for the FSS and ISS, and through yourself, through committee and board. And then what will happen next is after the 3rd of March, on the assumption that this is all signed off by committee on the 3rd of March, the final valuation report will be produced by Hymans, the fund actuary, and then we'll be able to confirm all the employer contribution rates to the employers, and they will be to cover the period April 23 to March 26. So this really kind of concludes, or is very close to concluding, that whole valuation cycle. That's all I was going to say on the report itself, but obviously Chair and board members happy to take any questions.
Thank you again, and it's always also very comprehensive. And at this point, I don't see any hands up, but I have got a couple. Oh, Riot is with us now. I see him. He has appeared. Welcome to the meeting. And yes, if you want to go ahead.
Thank you, Chair. It's Councillor Wright. I've just joined the board, so very pleased to have joined. So, Ian, I've got two questions. One is around the low responses that you said that you had for the FSS. Is that usual, or is that a particular concern?
No, it's not a concern particularly. I think if there was a concern, the employers would have responded in bulk, as they have done in other areas, where there's been anything that we have needed employer sort of input or employers have been concerned about, they are quite happy to approach us. So I don't take that as a concern. And we gave them plenty of opportunity. We sent out all the information. We wrote to each individual employer separately as well. It wasn't just on a sort of a block email. It was actually an individual email to each employer. And it gave them clear information on, the points to lay it out and if there was any questions. So to answer your question, no, it's not a concern. And they had every opportunity if there were any concerns, and there clearly haven't been. So I'm comfortable with that.
And just my second and final question is, so the assumption I think you've used on inflation is the 2.9%. Obviously, we know that inflation currently is obviously at a higher rate, but obviously I appreciate this is modelled over 20 years. Mm-hmm. So is that something that obviously has been modelled into those assumptions?
Yeah, that was all done by our fund actuary, Councillor Riot. So what we do in terms of assumptions, we work very closely with our fund actuary, and that's Hymans Robertson, and they do a great deal of modelling and sort of assumptions going forward well into the future. And it was working with them that they came up with a value of the 2.9 that they were comfortable with.
Yeah, thank you, Chair.
Thanks.
Thank you, Councillor Riot. And I have got a couple of questions in relation to the draft strategy itself. And they're quite minor points, as I said in my email to you. Now, the strategy is addressed to employers, and some of the employers are small employers, and it's written at a very, very high level. Is there any possibility to simplify it or to add some additional explanation at a later point? That is number one. Now, the other thing it is in relation to typos, layout, and whatever. I see it is slightly different here on our agenda than it is on ModGov, because I looked at it yesterday on ModGov, but there were some typos in it. There are no page numberings. So the pages on top are the agenda pages. So you have 59, 60, etc. But then when you're looking at the bottom of the page, which will be the actual draft strategy, yeah, because the numbers on top are the agenda numbers, but there are no page numbers for the actual agenda, strategy. See what I mean? If you're looking at it, it starts in the very beginning, the pages are numbered, and I think that is something that needs to be looked at. There is a typo, I believe, on page 45 alone. And then the other thing is, if we are talking employers, now at some point the actual abbreviations are explained. But I was wondering, for ease going forward, could to both of the strategies there be an index of acronyms so that employers actually know what it means? Because it is, very, unless you know what you're talking. These are just a couple of suggestions when I was going through it last night. Now, also, why have we got, and this is the point now, why have we got things highlighted in yellow? What's the point of that? Because I couldn't quite understand that, because there are items which are highlighted in yellow. If you're going to page 55, which I've got in front of me, and it's all the way through, if it is not supposed to be, it doesn't look very professional.
Okay, do you want me to come back on those individual
and
points?
Then, well, just note it for now. I did put it all in an email, and then on page 99, the numbering on the actual items is out, because it's page 92 on the agenda, or 15 on the actual next strategy. It goes to point 81, then the next point is 8.1, then the next point is 8.4, and then it's 8.3. So they're out of kilter.
Okay.
And they also don't match. So the two strategies, before they go public, they need to be looked through and corrected wherever is possible. Because,
sure.
And I've only, skim read, because like I said, I've got my dates wrong. So if we can have them all checked before they go out.
Before they're finalised.
Yes.
Do you want me to come back on any of those points, or shall I take those offline?
Yes, if you can, please do, but otherwise do it offline.
Okay,
whatever you prefer.
I'll come back offline on those, because they're all points that we can work through.
Yes, it's all it's all working points.
Yeah.
Now,
okay, no problem.
Are there any, and I did put it in the email if it makes sense, which was very late last night.
Okay, thank you.
Are there any other questions, comments on item 6, on the 2 draft strategies which are appended to this report? There are none, Ian, and with that, we will move over to the next item. No hands up. Thank you very much.
Thank you.
So we are now going over to item 7, and I believe that is Kat, and that is our net zero climate change strategy. Page numbers, and I don't know because I haven't got that in front of me. So, oh no, it's Bulesh who has come up. Welcome, Bulesh, and over to you. Thank you.
Welcome board. Hello. Kat is also on hand, just for the record, in case there are any questions of a detailed nature. So I'll start just for the purpose. It may be the first time you have seen this. So the purpose is to inform the board of the development of the net zero climate strategy and feedback received during the first public engagement on draft targets and measures, and that took place during summer 2022. The report also provides the pension board the opportunity to comment on the draft strategy. Before we go on to the kind of bulk of the report, points 3 and 4 are there to remind us of how the fund makes investment decisions. So I'll quickly read out just a few sections there, which I think are quite important. So the fund must follow the law and stat guidance for preparing and maintaining its investment strategy statement and take proper advice and act prudently when making investment decisions. Now, the proper advice piece comes from our regulated investment advisor, and that's Hymans Robertson. Subject to this, the fund should also consider any factors that are deemed to be financially material to the performance of its investments, including environmental, social, and governance factors. The appetite of the fund for taking risk when making investment decisions is ultimately for local consideration and determination by the local pensions committee, subject to the aim and purpose of the fund to maximise investment returns within reasonable risk parameters. The important bit here is it is not the role of the fund to put non-financial benefits such as ethical or moral considerations above those of the employers funding the pension scheme. If we just move over to point 7, the journey to produce the fund's first climate strategy started back in November 2021 when the pension committee agreed to commence work, recognising the systemic impact climate change could have on the fund. In June 2022, so last summer, it was agreed to engage on the proposed metrics that were developed in line with the net zero investment framework. And that's a recognised framework. It was like really new at the time. We've taken into account all the points and metrics that they've included within that framework, and our strategy, we believe, will take into account all those sections there. So moving on to a bit of background, points 9 and 10. So in recognition of the climate risks changes posed to the fund has produced a climate risk report annually since 2020. So this is a separate report that we've been doing well in advance of building a net zero strategy. The report combines bottom-up and top-down analysis and is designed to give the fund a view of the climate risks held throughout its portfolio, accompanied by proposed actions the fund could take to manage and reduce those risks. That kind of demonstrates we've taken climate risk seriously ahead of embarking on writing an official strategy. Since the fund's first climate risk report, which was taken as at the 31st December 2019, so we took a snapshot of all the holdings and we measured the climate risks as at that point, the fund has shown clear progress. And then 2 years later, as at the 31st of March 2022, we can see that the carbon intensity of the fund had reduced by circa 26% across all the measurable investments. The second bullet point in point 10 there says the fund's exposure to companies that own fossil fuel reserves reduced from about 8.5% to about 6.8%. I won't go through the rest of them, but moving on to 13 and 14, which talks about the engagement that took place last summer. So the local pension committee at its meeting on the 10th of June approved public engagement on the draft targets and measures related to the development of the net zero climate strategy. The table at 14 and 15 tells you what the fund did in order to engage with all the members and the employers, and the table at 15 shows the results. So 14, we sent multiple emails to circa 40,000 scheme members that we had emails for. Email addresses for. The engagement was also available via the pension fund's website and highlighted on the main page. It was highlighted as part of the email that gets sent out to all the members as part of their annual benefit statements, and employers were sent as part of the employer bulletins the link to the engagement and asked that they shared that with their staff. You can see the results in that table there. We had 1,025 responses. Most of those were scheme members. You can see 424 were active, 177 deferred, and 403 pensioners or dependents. We had a number of employers also respond, so 9, which represented about 35% of total fund membership. We also asked some of our investment managers, or to comment on it, and we had 6 responses there. And the last section there is we had 45 others. We employed a method of checking NI numbers just to make sure people were members of the scheme, but we only had a very few that we couldn't match. If we move to point 16, this sets out the summary from the responses for the targets that we've proposed. Without reading all the bullets, you can see at point 16 we've got 9 bullet points. The first 3 is what we define as the primary targets that the fund is proposing. You can see we've got net zero by 2050 with an ambition for sooner. We've got a medium-term target, which is by 2030, a 40% reduction in net carbon emissions from our 2019 reported levels. And by 2030 also to reduce the intensity of the fund's equity portfolio by 50% from also the 2019 reported levels. Now, all of those 3 are in line with the framework that we talked about below earlier. Below that, we've got 6 secondary measures. So these are there to support the fund. The primary measures are, like I say, the primary things that the net zero strategy wants to achieve, but we've got a number of secondary measures there as well. I won't read them all out, but you can see that there's things like reduce the proportion of the fund with fossil fuel exposure, for example. Point 17, within the engagement exercise, the fund also asked the following questions regarding carbon offsetting. We can see that the main response was only offset if it removes carbon from the atmosphere, receiving the most support at 42% of responses. Just moving over to 19, there was also an opportunity for respondents to use free text. The table at 19 summarizes a lot of those free text responses. There were quite a lot, over 500, I believe, and we've tried to incorporate as many of those as we can into the strategy. Now the table goes on a bit. I don't intend to run through individual parts of that, but we've incorporated those into the strategy as it's been written. Also of note, the engagement exercise also asked of the respondents of their knowledge on the fund's fiduciary duty and what the fund invested in. That's at point 20. We can note that the level of knowledge was relatively low. The fund will pick this up as part of action for communication with scheme members at the next review of the administration and comms strategy. Work has also been undertaken to improve the information available on the member self-service website. 21 to 26 summarizes the strategy, which is included as part of Appendix A. Please do have a look at it. It's split into 4 key sections, which are described at point 24, which are climate change, risk and opportunities. We've got a section on targets and measures, which we've just talked about. Decision making, how the fund will integrate decision making into everything it does from an investment standpoint, and then stewardship, engagement, and divestment. 25. It is also worth mentioning that the strategy sets out the progress will be monitored on a regular basis, including commitment to continue to produce annual public reports on the fund's climate risk. So they're the reports that we've been doing since 2019 that we talked about earlier, and we've had 3 to date. 26, the pension fund as a long-term investor must take a long-term view of its approach to investments. The fund will review this strategy and the targets at least every 3 years and monitor progress annually. So, the targets that we've proposed, if approved, we'll monitor against those within the climate risk report, which we generally take to the last pension committee each year. So what are the next steps? We've got points 27 and 28. So the fund will continue to develop the draft net zero strategy by development of an implementation plan for remaining asset classes. It's probably worth noting at this point that although we measure the carbon intensity and the carbon emissions of our portfolio, not all parts of the investment portfolio are easily measurable. The obvious parts already are. Things like infrastructure investments and property investments are in development, not just by us, but on a global scale on how to agree, how to measure things. 28 talks about the pension committee approving on the 18th of November a final consultation. The consultation has now closed. I think it closed last Sunday. We've got over 700 responses, and the net zero climate strategy will be presented to the local pension committee for approval on the 3rd of March. I don't think I've got anything more to say, but I'm happy to take any questions at this point.
Thank you, Bhulesh. Very, very much appreciated. And there is an awful lot of detailed information in the report. Now, what I personally really, really like, it is that we do have this commitment because it is one that is very much, in the focus of, but and I also think it is really, really important and also has been fantastic that all the comments have been noted and have been incorporated. However, what concerns me is that there is always such a huge drive to climate change and zero emission. What I wonder it is, because I haven't seen it, have any of the reports or when the consultation went out, that there has been a disclaimer, because what we actually are is an investment fund. And this investment is there to actually provide all of these people with an income in the future. And, you know, if, say, for instance, and I'm only using an example, at point 10, where the fossil fuel reduction has gone down, which is commendable, but say for argument's sake, if there was a reduction to zero, it could have a detrimental impact on the fund where there is no income, which then puts the pension fund, the, you know, and the security into total jeopardy. So my question really is, while environmental changes are very, very important to look out for, but there is a balance to be achieved and the risk to be raised, that you can only do so much. So could you comment on that for me, please? Because to me, that is really, really important, because you've got to balance, you know, the intention of saving the planet to actually the security of the fund and, you know, the best interests of the fund members. Thank you.
No, I think you've hit the nail on the head there, really. You've distilled what we're trying to do at the fund here into, you know, a couple of minutes there. You're right. We exist to pay pensions and lump sum benefits first and foremost. This fund cannot fix climate change on its own. We're here to manage the risks. So you're right. We aren't going to be at zero fossil fuel exposure anytime soon. Having zero fossil fuel exposure has its own risks, in the sense that, you know, it could be a very well performing asset class, and if we're at zero, the fund does not benefit. The flip side of that is we become poorly funded, employer rates go up. So we have to manage all these risks, and the best way to manage these risks is looking at, you know, across the board, what are the risks, and managing them down over time in a prudent manner. We don't intend to make sharp moves in any direction or be overweighted in any particular place. I hope that helps.
Thank you. It does help, but my concern is that when I read it, I found it wasn't sternly enough pointed out anywhere. And maybe just as an addendum that, you know, when we're monitoring it, writing future reports, that this, you know, those comments should be highlighted, that it is actually pointed out to members. Yes, we note your comments. They're all very commendable, but we're here to make money in a nutshell. So just leave that thought. Manjit's got his hand up. Over to you, Manjit.
Hello there, Bulesh. How are you doing?
Hello.
Actually, my question was on a very similar line to the chairs, really. You know, you mentioned in points 10 about fossil fuels and risks there, and Councillor, the chair has pointed out the fact that there is some elements of, you know, we need to have some clauses there which sort of highlight some of the risks. What I was going to ask you was, is there any sort of measures that you're looking at going forward? I know, because we've been running this now for 2 years, that show you the returns as you move away from fossil fuels, and then the impact of that, and the mitigation you mentioned, which is if they are lower than expected, raising employer rates. Is there anything there that can show us what's happening currently?
We take a report to local pension committee every quarter, which shows the returns by quarter, by 1 year, by 3 year, by 5 year, and since inception for all the investments we have in the portfolio. What we don't have is a way to say, as we've now removed a portion of fossil fuels, what would have been the result. So that's very difficult to do when you consider we have at least 25 managers within the fund, and you know, we don't have the granular data to see their investment changes on a at any given point. We don't know if they're holding 2.5% of a fossil fuel company or 3% at any quarter. So that's really hard to do.
Because the reason I ask is that you've got figures there for how much you're reducing things by, from 8% to 6 point something or other. And although there's small percentages, the figures of investment are quite large. And it's a case of saying, okay, if we're reducing that to the chair's point, what's the impact? And if there is an impact on employer rates going up, then there should be a lead-in time to prepare people to say, well, there's an impact of this, and this is what's going to happen. So I wonder if those figures are something you're keeping an eye on, because they should, your investors, your companies who are investing for us, should be telling us the impact of that investment. Really, I would have thought. I mean, maybe I'm.
Yeah, well, we do get monthly and quarterly reports by every manager, which are then compiled together to form this one report that we take to committee every quarter. You're right. I mean, with the fund has had a cracking 3 years. We are planning on managing down over time, but in a very measured manner. I know Declan's had his hand up for a while, so I think he's got something to say on the matter as well.
I suppose just to help flesh out a bit, manager. It's hard because just so many other factors change at the same time. So if you look back over the last few, I don't know, if you go back sort of not the last couple of years, but before that, you'd have thought sort of, going low carbon was absolutely the right thing to do because the tech companies were on a real tear. So they were really kind of sort of driving the returns. But if you look over the last 2 years, you'd actually think the kind of flip side, because obviously kind of the oil and gas prices have gone up. So what we do, just because there's so much uncertainty, we do review the strategy on an annual basis. So Hyman's do sort of, I suppose, plug all the expected returns through the different asset classes through. So we're forever trying, I suppose, steer the ship, because as Bill has touched on, we don't want to make big kind of diversions, because once if you do that, it costs you a lot of money, and then you run the risk of having to sort of pull back. So we do that annual check on where we are, but also as part of the net zero work, we did get Hyman's to run some analysis for us about that diversification loss, because it's not all about the return, it's that you're going on the positive side, it's all about, well, what's the risk we could really sort of tank as well. So we did get some scenarios run around that, and they all do tend to point to the best for the investment return for the funds is an orderly transition. And the targets that we put in the valuation are based on kind of, I suppose, what's known now about the kind of those future investment returns, including the I suppose it is more shorter term impact of the cost of that climate transition as well. So we use the best information we've got, but it's by no stretch of the imagination sort of an exact science. It's tough. There's a lot of uncertainty.
Oh no, I totally agree, and I think we talked about it last time as well. That as the chair said as well, it's the doing the right things over a period of time. And I think what I was trying to understand was that if you do sort of manage that in that way that you described, which is really good, and then the impact of that you see, or you can predict going forward, because even green technologies, there was a point, I think, at one point where the world was saying green technologies are going to go cheaper, but as a result of what's happened in the last year or so, they reckon that supply chains have been impacted and green technologies may change in pricing going forward as well. So there's an element there that needs to be taken into account. So it's just that monitoring the finger on the pulse, I guess, which I'm looking at in terms of there's no impact on, well, there's very little impact on employer rates going up, and you've got that projection going forward a few years, so you know what's going to hit you if something does hit us.
Yeah, I mean, to be honest, it's from what you touched on there. That's why we don't do sort of direct investing ourselves as a fund. So we just don't have those research capabilities. That's why we employ the managers to sort of do it on our behalf. And then it's much easier to manage a manager and see, are they being rational, are they taking things into account, than try and sort of stock pick yourself. So.
Yeah, that's fine. Okay, no worries. Thank you.
Right, Manjid, you happy? Yes, obviously.
Yes,
the next hand is up is VJ. VJ, over to you.
Thank you, Chair. It's good to see that we're making progress, and we are looking at the net zero agenda and have been looking at it for a while. We do, as councillors, get people contacting us about our investment strategies in the pension fund, and given that we are doing some good things, I'm just wondering if you could help us to maybe with responses that we could formulate based on that report, that we can go back to constituents where, look, this is what we are currently doing. I think that might be useful. And the point I would make, and you touched upon it in your report, is because there's 2 dates when you talk about the climate agenda. There's the 2050 and there's 2030. and obviously you do address that, and obviously the challenge in trying to get net zero by 2030, but there is a big obviously push on the 2030 date as well. But I just made that point. Thank you.
Yeah, if I may, I'd come back on the first point. The whole point of a strategy like this is to be able to point people in the direction of it and use parts of this at various points. So we don't have to keep writing individual responses. And that said, if you do have something which is a little bit off the wall, we can totally assist in that. But we'd like to use a written strategy, which we will have on our website, on the pension website, so we can always direct people to the relevant sections within that. I think when it's published and approved and published, we'll be able to direct most people to a part of that strategy, which should answer the majority of questions you'd get.
Thank you.
Happy with that?
Yes, thank you.
Thank you. So but if I may add, what I do, I keep these reports handy, and if any residents do come up and ask, I point them to the report. And VJ, they are on the Leicestershire County Council website if you're going under that, and it even has got all of the attachments, etc., etc. So it is very, very easy. You've got virtually everything you've got in front of you now to refer back to. Okay, nothing from Councillor Shepherd, nothing from Ruth, nothing from Caroline. I think you got away lightly, Bhulesh. Thank you very, very much. Thank you, Kat. And that completes report number 7. We are now going over to item 8 on our agenda, on page 143 to 136. That's a pension business plan and budget 2023 and 2024. And there are also additional documents attached to that, which is the business plan, and Appendix B, the investment business plan. And that is Declan. Welcome. Over to you, and take it away. Thank you.
Thanks, Rosita. So obviously, as you said, budget and business plan, it's going to go to the committee for approval in March. So, obviously happy to take any comments to feed into that process. We've got picking up the business plans first. You've got Appendix A, that's the sort of the admin section's business plan. And to be honest, it's a mixture of initiatives that you're already aware of through the papers that sort of Ian and Stuart tend to take you on a regular basis, and continuous improvement type activities. So there's nothing I want to particularly sort of pull out from there. And in Appendix B is the investment side of the world, so much more the domain of what the committee tends to do. And you've seen the net zero sort of strategy, and you kind of no real surprise that's kind of quite a strong theme that's running through the business plan for the investment side, as you'd expect. And I suppose the point to note is kind of the strategy is it was a lot of work to do the strategy, and it'd be a lot of work to sort of implement the changes and make sure it really just sort of feed through into those kind of investment managers, and get the balances right between sort of the investment returns and managing the climate change risk. But obviously kind of as sort of as discussed in the last item, the key part of the sort of the investment section is to get the required returns, to get the sort of in the right level of risk as well. So so that is the sort of I suppose the dominant sort of point of the plan. It can be lost a little bit in sort of some of the sort of summary notions, because there's the summarisation of this business plan. There's a bullet in there that talks about a review of equity target return and the protection assets, and I just wanted to pull that out because it is over 50% of the fund's assets. So it's a really key kind of piece of work that will get spread over a few kind of a few committees, and we've got a separate investment subcommittee for the pension committee, so that these items can be looked at in a little bit more detail with the sort of the support and advice of Hymans, and bringing the managers in for sort of conversations around those as well. But that'll be probably the key piece of work on the investment side during the course of the year. Flipping back in terms of service plans, in terms of the budget itself, again, it's a mixture of the investment side and the admin side. The investment side, again, dominates it, just the sheer size of the management costs. And they do tend to just sort of track the level of assets as the amount of assets we've got as the fund has been going up, and it's been going up sort of pretty sort of satisfactorily in recent years, those costs do tend to go up. The kink in that tends to be the performance the performance fees. Not every manager earns performance fees. Quite a lot of them don't. But when the ones that do are performing strongly, actually the relative cost of the fund goes up. When it's the flip way around, actually the relative cost goes down. So even as a percentage of assets, it can be a little bit spiky what we see there. In terms of the kind of the non-investment costs, just flagging up, the central costs haven't been agreed at that stage. It has to go to sort of shareholder agreement. For members who aren't aware, we kind of ourselves and the other sort of pension funds in the LGPS Central pool do own LGPS Central, so we've got quite a key sort of stake in setting the budget. It's likely they'll just get an inflation increase, which is actually quite a high increase with the inflation, the sort of the levels it is. So that's still to be agreed, but it shouldn't deviate too much. And the admin section is the final bit that makes up, so the teams that Ian's run, and there's no significant changes from where sort of things are at the moment. So that's all I was going to touch on. So happy to take any comments.
Declan, thank you for that. But for the new members on the pension board, if we go into the actual report, page 144, where is the pension fund budget, and there's this lovely little table which gives you the increases, the forecast, which you were talking about. And then as you're going down on page 145, there's investment management expenses. Maybe you just want to touch on that, just basically. So, for instance, that Councillor Riot, knows where we actually are and what it details on.
So in terms of describing what the type of cost it is, do you mean? Or
yeah.
Okay, so obviously the management costs you can see in that sort of the table, sort of the 23 million as we were in sort of last year, going up to sort of the 29. And like I say, they're the amounts that we pay the managers. So you may see if you do investments yourself, we'll tend to pay kind of a fraction of a % of the assets we invest with the managers for them to sort of run them on our behalf. So when you've got kind of, as the fund does, sort of £5.5 billion of assets, even kind of a fraction of a % is a significant amount of money. So that tends to be what those management fees are, and we've got a whole range of different ones, from sort of passive tracker funds, which are very, very cheap, where it just tracks an indices, all the way through to ones where we've got infrastructure managers who actually own and operate wind farms, solar farms, I think one of the airports, different things. So, and they're obviously a lot more expensive. So you'll pay a lot more for those, but they're much more actively involved in running the business. So that they tend to be the big dominant costs. When you've got things like transaction costs, obviously managers buy and sell things, and you've got the costs that incurred of doing that. So whether it's stamp duties, brokerage fees, that sort of things. And the performance fees I touched on, the other big one. It's just, if managers hit above a certain level of return, it tends to be on those kind of ones I touched on, where they're actively involved in running the asset. They'll get a performance fee if they hit a sort of certain hurdle rate. So it can be a little bit feast and famine, where sometimes they'll gain a lot and other times they won't get anything at all, which is kind of is handy. It's always a difficult one to find the right balance on your performance fees, but they tend to be fairly standard in the market. It's not something we particularly push for, but it's something that's just a feature of investing in certain asset classes.
Thank you very much. Ruth, Caroline, Richard, Vijay, Manjit, any questions? Ruth. Hello, Ruth. Please go ahead. Good morning.
Good morning. Good morning, Declan. Can I just ask regarding the staffing costs for Ian's team, so the administration side? So obviously 23-4 is going to be a significant year in terms of the implementation of pension remedy. Does the increase, is that just an inflationary increase, or does it allow for any additional resources for the team as well?
So by pension remedy, are you referring to McCloud? Or?
Yes, sorry.
Yeah, so he's effectively, Ian's got sort of resource, a mixture of sort of his established staffing and sort of temporary resource already working on those. So it assumes a continuation of those into kind of the next sort of few years, because although kind of, I suppose, McCloud has come as a big thing, Ian, as sort of, you've no doubt picked up yourself, they're always getting hit by some regulation or another. So it assumes that the McCloud team keep going, but don't drop off. So it is just an inflationary increase at the moment.
Okay, thank you.
Thank you, Ruth. Are you happy with that? Yeah.
Yes, thank you.
Ruth.
Yeah.
Right. I can see no other hands up. No, there are none, Declan. Thank you very much. That concludes your report. And that is item 9 now. Welcome, Stuart, page 167 to 176. And over to you, Stuart. Thank you.
Thank you. Thanks, Chair. Morning, everyone. So the report today mainly focuses on 2 areas that we're hoping to introduce into administration very soon. The first one I wanted to talk about was a bank account verification facility that Haywards have introduced that will allow us to check member bank accounts prior to making a payment. It's fully integrated with Altair, our administration system, and we're in the process of finalising testing at the moment. So the system works in conjunction with a third-party supplier, GB Group, specialists who deal with data verification, to check the details. The information from a member's record is checked against the data they hold, and a score to each element of data is provided. And since the report was written following testing, the scoring process has been tweaked slightly, and there's now 3 key areas that are scored that determines what the outcome of the check is, not 4 as stated in the report. So there's 3 areas: matching individual and account number, the sort code matches the account number, and that the account details are matched to the individual at the correct address. And in the event that all 3 of those checks are passed, a pass is returned and we can proceed. So in the event that not all 3 are passed, then either a refer or a fail will be returned. So the system does allow for an officer to also manually change the status to pass, but it says pass overridden, should the status be shown as anything other than pass. And in these circumstances, the officer would be required to state the reason that they have overwritten the refer or fail, and this would be checked by a manager before the case could be passed through for payment. So as part of testing, some minor issues were raised as part of that process, but were mainly resolved. An issue identified was where some of the data held by GB Group does not include sort codes, which means that in those circumstances a full check could not be carried out. So the system was unable to confirm that all data was accurate and produce a pass. It was producing a fail, but we've tweaked that now following some feedback, so that becomes a refer, and an explanatory message pops up advising why this couldn't be passed. So the system is currently being updated, and with this change, once implemented, we'll be able to sign this off to arrange for implementation into the Altair Live system. I just wanted to mention that that in the event where the verifier returns a refer or a fail, we're just finalising a process to deal with those, which will essentially involve double checking that the data, that if it's data that we've entered onto the system has been entered correctly, and in the event that it hasn't been, it's not that's the problem, we would more than likely end up going back to the scheme member, which would involve them asking them to resubmit their data just to double check their data, and submit that through for further verification. So the other area that we're looking to introduce fairly soon is a more elegant online retirement process for our deferred members. So this is a new facility that Hayward have introduced fairly recently for those deferred members that are registered for the member self-service facility, to enable them to claim their deferred pension online by utilising new functionality available within the portal. So this is something that we have already been doing in a more basic form, but the new functionality that's available pushes more elements online into a more user-friendly format. There's also the same facility for active retiring members, but at the moment we've decided not to implement it for those, so we're just concentrating on those deferred members. And the new facility introduces the concept of tasks for the scheme member to complete. So there are 6 tasks, and the idea is to allow the member to provide the various documents and information via MSS to allow officers to bring the pension into payment. So, for example, the task relating to bank account details allows the member to directly input the details into the system, whereas previously the details would have been entered onto a form, uploaded, and then an officer would need to type the figures into the record. And then in another task, the system allows the member to select the level of lump sum that they would wish to take using on-screen sliders. And this information is then submitted onto an internal task that instructs the officer the amount of lump sum that has been requested. And again, this replaces a form that would previously have been completed either typed or written by hand and downloaded, filled in, and then uploaded to us. So again, there's been 1 or 2 issues that have emerged as part of the testing process that we're looking at. The marital status that we normally request as part of the retirement process isn't included in the Hayward facility. On reflection, we've decided that we can manage without that at this stage of the process, and we're aware that other funds don't request this either. Where a member has a small pension, the option to take a one-off payment instead of a pension is not included in the process as standard. So we're still keen to offer that, and we're currently finalising a work round process to deal with this. And as finally, the other area that's not included is that members must declare whether they intend to use their lump sum for recycling, i.e. are they going to take that lump sum and reinvest it in another pension. And currently we expect all members to declare their intentions with regards to their lump sum, but that's been included from the process for most members. And again, we're finalising a work round that would include a document that they would need to state that they declare that they don't have any other, they don't intend to use that. So once these workarounds are complete and the internal process is confirmed, then we will be intending to introduce that into our live processes. And finally, I just wanted to touch upon something that Ian's already mentioned in one of his reports, that we are in the early stages of a review of our processes around the aggregation of records. And as Ian mentioned, there are quite a few different scenarios that could apply when we're looking at aggregating records. And the aim is to work through each of these scenarios and streamline all areas, including the comms, the checking and the updates to the system. These can get quite tricky when we're working through these, particularly where multiple scenarios occur simultaneously, which can happen where members have multiple number of records. And we'll update you on progress on this topic at a future board meeting. That was all I wanted to say on that count, Chair. So any questions?
Thank you. Yeah, Stuart, we've got a new member. Do you want to just refer with a small explanation to Appendix A and Appendix B of your report for our new member for information only?
Yeah, certainly. Let me just call that up. Right. So Appendix A is just an update of where we are on various business as usual areas that we're looking at. So we include this each report just to update you on where we are with those various areas. So they include things like member self-service, just to let you know where we are with that. We're constantly trying to improve the facilities that we can offer to people to make member self-service something that people will want to register for, and it's an attractive area for them. And then there's other areas, including McCloud, which I'm going to touch on shortly, and then just an update where we are with data quality, which is an area that again that we're constantly looking at to make sure our records are as accurate as they can be. And then the other appendix relates to statistics in terms of the numbers of people that have registered for member self-service. There's an overall figure under all employers, and then we break it down into the three employers that we think will be of most interest to the board, the county, the city, and Leicestershire Police. And again, there's a steady upward trend with the number of people that are registered, and we take regular actions to encourage people to register. We mention it in their welcome pack. Most letters include reference to member self-service. We write to employers to give them some text to put on internal intranets, and we've also recently started writing to members that have just turned 55, because we tend to find that it's the older members that are more interested in this.
Thank you so very much. VJ, any questions on any of that? But
no, that's fine. Thank you, Chair. That was
okay.
Very useful.
But can I just ask, you have got all of the paper and the appendixes available, or should we send another link?
No, I have all that information. Thank you.
Good, great stuff. Any questions from anybody else? Caroline, good morning. Go ahead.
Morning. Stuart, I was just interested, when we have a third-party supplier, GB support in terms of the verification checks, was that somebody who Hayward recommended, or did we procure that service from them separately? And also, what checks have we done to make sure from a data protection side that, for example, once they receive our data, they obviously only hold it for so long. We know how they destroy the data. I just wondered a little bit more of the background on that third-party supplier.
Sure. Yeah. So we purchased the facility as a block item. So,
right.
So Hayward's developed it and in association with the GB group. So we didn't pick them particularly.
It wasn't right. That's
no. So
yeah, that's
that was
helpful to know. Yeah.
And we've undergone a data protection impact assessment in accordance with our governance team. So yeah. we've been through all the hoops and made sure that everything's in place and there aren't any issues, and that was signed off. So everyone was happy that we're not taking any risks.
Any risks with data? Yeah. No, that's all I really was asking. So that's lovely. Thank you, Stuart. Okay. Thank you.
Stuart, I see no hands up anywhere, so I think that concludes our item 9. Again, for VJ, I know I keep referring to everybody on the first name basis, which may be wrong, but if you look at the bottom of the screen, you have the full name there to refer back to, and as you can see, our steward is called Stuart Wells. So, and it is all listed in the paperwork. Now, Stuart is going to also introduce the next item, which is on page 177 to 186. And that is the McCloud progress report that has been giving us some headache for some time now. Over to you again, Stuart.
Thank you, Chair. Yes, just wanted to update everyone on the position regarding the progress with the McCloud report. It is a fairly long report. I won't cover everything, but obviously there'll be opportunity at the end for any questions. So just to recap, the age discrimination case that resulted in the McCloud ruling on the age discrimination case that followed the reform of public sector pensions. Funds now need to ensure that the same protections that were originally introduced purely for older members apply to the younger members as well. And to do this, we've had to gather hours and service break information from our employers in respect of the period, the 1st of April 14 right up to the 31st of March 2022. So when I say hours and service break data, anyone that's changed their hours, their part-time hours, we need information with regards to those changes, and we update their records with that, and the same with any breaks in service. We would add those to the records as well. So work on the updating of those member records is ongoing. We have begun to identify a number of issues, unfortunately, as we go. I'm going to go through some of those issues. I won't go through all of them because there are quite a lot, unfortunately. The original interface tool that was developed by Hayward to automate the process of uploading data that caused some initial problems, which did result in a small amount of data being overwritten for some members. So these records were identified, the data was corrected. However, it did result in urgent discussions with Hayward's, and a revamped version of the interface tool was created as a result of what happened. And going forward, there are still complications using the revamped tool. We found that the way it is designed to work is not the easiest to navigate, as it's been intended to load all data chronologically for members in one load. But given that there are members that have worked for different employers, particularly school-based non-teaching staff that may have moved from the LEA to an academy and then again to a multi-academy trust, it's been nigh on impossible to collate that data into a single load. And any data that we try to submit out of sequence errors and requires manual intervention. The way the data is held on our records for members with multiple employments continues to cause issues as well. Historically, those members had only one record on our system, even if they had more than one record in payroll, which requires a rolling up of data where updating the Altair record. So what we mean there, if someone has two jobs within a school, they'll have two payroll records, but they'll only have one record on Altair. So when the hours change, then those two jobs need to be collated. But since iConnect was introduced, we have been creating one record per member per job for those new records that have come along. So the number of pension records matched the number of payroll records. But this does mean that we do have two different approaches to how records are made up. And when producing backdated reports, it's very difficult now to try and identify which method has been applied to which record. And as a result, it is likely that manual intervention is going to be required for many of these records. And we're currently looking at some kind of workaround for this. And that's ongoing, but it will be difficult to pull this together. So other issues that we have encountered are where employers have changed payroll providers or payroll systems, which has meant multiple reports have had to be provided, which again adds an extra layer of complexity when collating this data. We were initially expecting to be able to match a number of records using payroll references. This has proved difficult where members have changed employer or retired and pensioner payroll references have overwritten active payroll references. And as a result of these various issues, automation is going to be lower than we originally expected. So the latest position with regards to employers and the work that we've done is included in the report, and there's a long way to go. There's also information included around the data provided where the cases are unsuitable for automation. And these figures are very much a snapshot, and there'll be more cases added as the data is worked through. The report also touches on other areas of the project that will also need to be addressed, including extra potential aggregations, work around teachers that appears to be a bit of an unexpected admin area as a result of the ruling that's going to impact on us. Plus taxation issues, and there's going to be a comms exercise that will need to be considered later in the year as well. So as far as resources is concerned, as Declan mentioned, we've already added to our team. We've got 2 temporary pension assistants on 6-month contracts that we're looking at extending at the moment, and they're dealing with the manual input of the data. So the actual legislation is expected to come in October, and being ready for this is going to be difficult. In the event that not all records have been updated by October, retiring members will need to be assessed for whether they are entitled to the remedy on a case-by-case basis, which again is likely to involve a manual input of records, a manual update of records at that time. But we do have a plan in place to deal with that, but undoubtedly that will impact on our resources again. So that was all I wanted to really say on the report. As I say, it is quite a lengthy one, but if there's any questions, happy to answer those as best I can.
Thank you very much, Stuart. And for members, the action plan with dates is attached as an appendix. And I really, I just got to say, considering the complexity of all of this and the resources it involves to be ready by October must be quite a task for you and your team. So I just would like to put our thanks on record, because I wonder what the judge thought of when he passed this ruling. I think he never realized how much trouble and cost he occurs to us, to everybody at that. Are there any questions in relation to the report or the appendix to Stuart? And again, I'm looking around, nothing from Manjit, Caroline, Richard, VJ. No, I'm afraid, or not afraid. Oh, hang on, Ruth. Ruth, over to you.
Thank you. Thank you, Stuart. I appreciate sort of, how complex this area is, because I'm managing it on behalf of the police in my sort of day job. But in terms of member communication, and I suppose as a member representative, it's just understanding, when we get to October, if there are going to be delays in the payment of pension, it's just how we communicate that to members so that they understand, because I think for the vast majority of members, they probably won't have even heard of McCloud. And it's really just around, and I know you've addressed communication in your paper, but it's just ensuring that we've got appropriate communications, and if employers can do anything to help you with that, then please let us know. But I can see that, October will be a peak workload, I think, for all pension administrators.
Before Stuart answers, Ruth, just a question to you, because you see, I'm a lay person here. I'm only, you, Stuart, and everybody. But would there be any benefit of having a very basic briefing note that can be put on the website or circulated? Because when I don't know anything, I always appreciate a very basic briefing note. That sort of, what do you think? Can you, yeah.
I mean, it's certainly we are planning to communicate later in the year with everyone to let them know what it's all about and whether they're likely to be affected by this. The current thinking is that there won't be many members that are actually affected by this. It's going to be a huge amount of work to establish that they won't be affected by it. But nevertheless, the expectation is that there won't actually be many people whose pensions are impacted on this. We will certainly look to get as much information out there as we can, to make it as plain as we possibly can. It's one of those areas that we're conscious that we put a lot of information out there, and it's going to raise a lot of concerns when we find that ultimately most people won't be impacted by this. So it's kind of a balancing act between providing a lot of information and not concerning many people on the situation. Certainly, Ruth's point about whether it's going to impact on the time in terms of the day-to-day process, we will absolutely make that clear. We already have something on the website with regards to the retirement process, but that will undoubtedly need to be updated as this gets closer to October.
I see what you're saying, because a very few members will be impacted. We could potentially open a can of worms and set some hairs running,
Yeah, absolutely, and we don't want people thinking that they're going to have a huge increase in their benefits as a result of this, as it is, that the chances are that is unlikely to be the case. But obviously, process has got to be established, and we've got to make sure that we're assessing records accurately.
I'm actually glad you said that, because personally, I thought, we would have quite a lot of people who would be, benefiting as such. So I'm very glad you clarified that. Ruth, back to you.
No, nothing further to add, and thank you for the response, Stuart.
Thank you, Stuart. Stuart, I cannot see any further hands up on this one either. So thank you very much indeed again. As always, keep up the good work, and we'll see you in April, no doubt.
Thank you.
And I hope you're further forward then. Thank you. Right.
Chair, you've gone on to mute. Sorry.
Oh, I'm so sorry. Item 11, page 187 to 198. That's a pension fund training update. And the attachment are the training needs and the training progress. And I believe that is Ian again. Over to you, Ian.
I thought this was actually Kat. Am I wrong, Kat? Is this myself?
I can't see Kat online anymore.
Oh, okay.
I'm still here. I presented.
Sorry.
Well,
you haven't turned
was
up.
it sorry, I'm not sure who's doing
I'm fine. It's only a brief thing, so I can quickly go through it.
Well, please do. And just to add for, again, Vijay, We have continual training, and after these meetings, we always stay online and we receive a short training session, part of the job. Over to you, Kat, to just talk us through that report, as it's only an update. Thank you.
Morning, members. So as Mrs. Page, as Chair says, it's just to give you all an update on the fund's training policy, as well as the approach to delivery, assessment and recording of training, which both pension board members and pension committee members complete. The training policy, you'll be aware, it was last approved in March 2022 by the committee. And over Christmas, we asked that members completed a training needs assessment that could help form how the fund presents training to the committee and board going forward. Within the report, it lists all the different types of training that you receive. So obviously the face-to-face sessions held internally with officers after the meetings. We also have training sessions provided by other bodies. So I know a few members went on the LGA's fundamental courses or any conference courses. There's also recommended reading material, as well as the modules modules available on the Hymans Robertson online training, and the report lists all the modules which members are recommended to complete. Some will be more relevant to board than committee, as you imagine, in terms of investments is more relevant for the committee members. Within the report, it mentions about how the pension committee members have an information pack they receive. This, I think it's proposed that we provide a new version for the committee which will be updated, and then also a new version for the board, so have a bit more focus on board relevant issues. So, you know, the administration and communication strategy, the funding strategy statement, and other kind of more relevant documents to yourselves. So within the appendix, we have the kind of anonymised training needs assessment. So it kind of shows you across the board where knowledge is perhaps lacking, and officers can kind of go away and set and plan ahead. And then also progress as at January 2023. I know Councillor Shepherd raised a query on, I think, training for the Hymans modules. I would just say that we do get that data in a lag, but if any members have any questions on the report, I can take those.
Thank you, Kat, and Councillor Richard Shepherd, over to you.
Thank you, and thank you to Kat for just mentioning that point about myself. Yes, as Ian knows, as Kat knows, I have now completed Hymans modules 4 and 5, although the report shows in progress for the lag reason that Kat mentioned. Thank you.
Well, I will say that I haven't as chairman, and Kat once before Christmas offered kindly to go through, and if that offer is still open, I will get back to Kat before I forget and email her after this, because I just can't get on with the Hyman modules, but then I'm an IT Luddite. I believe, Kat, everybody has completed the assessment. For training needs. I don't think VJ has, so he'll probably will be contacted. But to reassure him that after the meeting, we tend to repeat an awful lot of the training. It's carried out by Ian. Thank you for that report, and over to VJ for the last word. VJ.
Yes, Chair, just to confirm that Ian has sent me the link to the Hymans training, so obviously I will get on that and obviously try and complete the training.
Thank you. And Essa, if you are very IT savvy and can do this, good luck to you. I am the biggest Luddite here.
I work in IT, so hopefully, if not.
Well.
But we'll see.
I'm a Luddite. So thank you very much, Kat. And that completes the agenda item 11. We are now going to agenda item 12 on page 199 to 220. That is risk management, internal controls. And again, there's an additional document, which is the risk register. And I do not know who that is. And
yes,
I assume...
This is me, Chair. This is Ian.
It's Ian again. Okay.
Thank you. Thank you. This is the standard report that goes to both board and committee each quarter. This is the pension fund risk register, which we review on a quarterly basis. The risks are split into the categories there, the 6 categories on point 4, and we assess these. And we basically review the risk register and make any updates as necessary. In the quarter, there was a review as normal. There wasn't a great deal of activity in terms of change, just the 2 points to mention. Risk number 3 on the investments, as Bulash has gone into great detail on already. The developing of the net zero climate strategy continues, and final approval is expected in March 23 at the committee, which will be a significant step forward in terms of that process. And the other one is the additional voluntary contributions, risk 8. As you know, we use the Prudential, and the national framework has been scoped to enable funds to review and tender for ABC providers. That's a national tender through the Norfolk framework, which is a subdivision of Norfolk County Council Pensions. We have agreed to be a founder member on that framework, as we see that as a real positive step for us. And that's also captured in the business plan that Declan talked about earlier on. That's all I was going to mention on the risk register, but obviously happy to take any questions, Chair.
Right, thank you very much. Anything from any members on that report? Quite a long... No, there is nothing. And here I was panicked that we would have a very, very long meeting because it is a very full agenda. But obviously your reports are so very good. Thank you, Ian. There are no hands up, and I'm just checking again. Anything? Ruth, Caroline, BJ, Richard? No. So that completes the item number 12. So there are no any other items to take as urgent. The only thing I need to say is, members, please stay online for your additional training. The next meeting, it is on the 26th of April, same time on Teams, as you're all happy to continue with that. So thank you to all the officers online, and I think we are closing this meeting now and remain online for training. Thank you very much. That concludes the meeting for today. Thank you.
Thank you.